Hey, what is up you guys? Today's video is very exciting because we're going over the top 2 very interesting stocks in my opinion that I am watching. One of them has ties to Amazon and there's a lot of intriguing information on this stock. The second stock is an essential store and it's also a great dividend stock. Also, the stock is really going to benefit a lot when we have a COVID vaccine ready for distribution. Of course, when they have gone through the necessary stages of the distribution process. We're going to quickly go over who these companies are, some financials, opportunities, and why I'm watching these top 2 stocks. Real quick, if you can give this video an early thumbs up, subscribe, and turn on those post notifications, I would very much appreciate the support. Let's jump right into the video. The first stock we are talking about is SpartanNash Company, ticker symbol SPTN. This company is basically a grocery distributor and a retailer. And at the time of this video, SpartanNash is trading for $18.93 a share. That is extremely cheap and I can see it doubling or even tripling because of the huge news and info I am going to go over in a bit with you. And SpartanNash has a market cap of $661 million, which is a small cap stock. Now going over SpartanNash financials, we can see their revenue growth has been very solid through the years, as well as their gross profit. However, their net income does look questionable. You can see here it was at $32 million and dropped down so bad to $5 million. So that's something you want to keep in mind. And their balance sheet, we can see with the recent year provided, they have $996 million in current assets and $565 million in current liabilities, which gives us a nice current ratio of 1.7. However, there is something you're going to want to look out for as well, and that is their debt. They have more debt than cash on hand, as you can see. So you may want to keep in mind for that. But as far as revenue growth and gross profit, that is a big A+. SpartanNash is a value-added wholesale grocery distributor supplying more than 2,100 independent grocery retail locations throughout the United States, as well as a grocery retailer with more than 155 company-owned stores in 9 states. They also serve the military community through their MDV division, in addition to offering premier fresh produce distribution through Cato Foods and third-party logistics through BRT. They are a Fortune 400 company and they are the largest food distributor to serve military commissaries. Now, some interesting information I came across is that SpartanNash has ties with Amazon. And by this, I mean Amazon and SpartanNash have a relationship because of a commercial agreement between the two companies. And this relationship actually goes far back to 2016. Because ever since 2016, SpartanNash has been providing groceries to Amazon to support its grocery online delivery. But in this commercial agreement I'm speaking of presently, there are warrants included for Amazon to acquire a minority stake in SpartanNash. Under the warrant agreement, Amazon secured the rights to acquire up to 5.44 million shares of SpartanNash for $17.73 per share through October 7, 2027, or an investment of $96.4 million if fully exercised, according to a SpartanNash regulatory filing. Of the shares, 1.1 million vested at the start of the commercial agreement. The remaining 4.3 million vest once an undisclosed amount of gross payments are made through orders under the commercial agreement. If all shares are acquired, Amazon would own a 15% stake in SpartanNash. But wait, after doing some more digging, there's actually more to this deal that may or may not be true. So after SpartanNash and Amazon announced this agreement, SpartanNash announced its next move, revealing an investment of $25.8 million to finalize a 7-year distribution center lease agreement. The DC offers significant freezer, refrigerated, and ambient storage space in a central market for food distribution. Because the lease was signed for 7 years, the same length of time warranted to the e-commerce company for its purchase of shares, the industry has reason to believe that this DC will play a large role in the partnership. So this is huge that SpartanNash is working with the most popular and Fortune 500 company. This gives SpartanNash a lot, and I mean a lot, of opportunity. With this commercial deal, it could or it could not mean that SpartanNash will be the primary distributor for Amazon's new grocery store, Amazon Fresh. And this would be huge for Spartan if this does happen, especially because Amazon is opening up more of these grocery stores. The first one was in Los Angeles, I believe, and they are planning to open up a new one in New Jersey. This leaves SpartanNash with really amazing growth opportunity and potentially becoming the biggest food distributor. I'm super interested in this company and will possibly be buying soon for the long term. With that being said, you may want to keep your eye on this stock. Stock number 2 I'm watching is CVS Health, ticker symbol CVS. This is a great retail drugstore company that you can rely on to buy things you need. And at the time of this video, CVS Health is trading for $71.08 a share, with a market cap of $93 billion, which is a large cap stock. Now, in terms of their share price, I do believe it could be trading for $80 to $90 these next few weeks or next few months because of a vaccine being distributed. And I will talk more on why I believe this throughout the video. Looking at CVS financials, their total revenue has been growing each year at a really great rate, as well as their gross profit is looking extremely nice. Now, their net income does look pretty solid, as you can see. In December 2019, it was at $6 billion, and in the trailing 12 months, it is now at almost $8 billion. Now, with their balance sheet with the recent year provided, they have $50 billion in current assets and $53 billion in current liabilities. So that's kind of iffy, but does not really scare me too much because of their solid revenue growth, their gross profit, and net income. And the reason I'm watching CVS stock is because of all this vaccine talk and with there being a vaccine to distribute real soon. This brings opportunity for CVS because CVS can potentially be the distributors for this vaccine. Plus, there's more opportunities in this stock such as mail order pharmacy and urgent care. With customers reluctant to visit retail stores to fill their prescriptions, CVS Health's mail order pharmacy has assumed greater importance in 2020. While revenues earned by the company's retail pharmacy network were down 4.3% year over year in the first half of fiscal 2020, mail order pharmacy revenues were up 12.9% in the same time frame. And I believe we will continue to see this number rise because it seems that we are starting to see popping numbers again with cases, and people aren't going to want to go out to pick their medications, most likely with other age groups. Another thing is that CVS Health's rapidly expanding Minute Clinic network will also play a major role in establishing the company in the urgent care market. According to one research report, this opportunity is growing at a compound average growth rate of 5.3%, which should bring it from a $19.2 billion market in 2017 to a $25.9 billion in 2023. Additionally, CVS is opening Health Hub stores, which is a remodeled version of its stores with more space dedicated to health services. The concept stores include phlebotomy services, I believe that's how you say it, sorry if I'm wrong, a wellness space for fitness or nutrition classes, and more shelf space dedicated to health products. A big part of the strategy is offering more services for patients with chronic conditions. So far, Merlot said the company had seen nearly twice as many Minute Clinic visits for chronic services, a total of 16%. Next year, CVS plans to offer in-person behavioral health services at these sites. Although the pandemic has slowed this process down, CVS does hope to have 1,300 of these stores open by the end of the year. And another thing to look at is that CVS has drawn in new customers. CVS Health has opened 4,000 COVID-19 testing sites and plans to add more by the end of the year. So far, it has administered more than 6 million tests to date. And of those new customers, 70% of those tested at its pharmacies and 40% of its business clients were not previously CVS customers. And lastly, CVS will now have a new CEO taking over for Larry Merlot, which is Karen Lynch. Lynch will replace the current CEO, Larry Merlot, on February 1st. Merlot will continue to serve on the board of directors until he retires in May. Lynch is currently the executive vice president of CVS Health and president of Aetna, the insurance company it bought in 2018. Lynch has been with Aetna since 2012. She has had a critical leadership role in CVS integration of Aetna into the company and helping lead the redesign and strategy of its stores. In a release, she said she will continue to make healthcare more accessible and affordable, driving better health outcomes for our consumers and communities. So this is another big thing and another big opportunity to look out for, to see how this new CEO will work, and it's also a big plus that she has ties within Aetna. With that being said, that brings us towards the end of this video. Very exciting companies, especially SpartanNash. In my opinion, I believe this is a hidden gem. And as for CVS, it has always been a great value dividend stock and just a great company overall. As you now know, there is a bunch of opportunity and exciting catalysts coming up for these top two stocks that I am watching. Let me know what you think about these two stocks. I would like to know. Please don't forget to like this video, subscribe to the channel, and turn on those post notifications to be notified every time I post a new video. With that being said, thank you so much for watching. Till next time, you guys. Peace.